Hi, I'm Mel Lopez, Chief Economist for ASEAN.
And I'm Peter Lundgren, founding CEO at Lundgren's Capital.
This is Sound Economies with Mel and Peter, a weekly East meets West podcast by Lundin's Investor Insights. Join us as we dissect the biggest and most interesting news on economies, financial markets, and central banks globally. Welcome to the show. Hi, Peter. It's ahead of Valentine's Day. How have you been so far this week?
I'm doing great, Mel. Thank you. I think the Valentine's business is maybe more for you. Then I'll take good care about the financial markets in between. But yeah, it's a great week. I was in Stockholm yesterday, actually hosting a couple of roundtables at a big event. We will revert to that in the end of our podcast today.
Mhm.
And then when we have finalized this podcast, it is actually out in the airport and off to Asia. And so we have meetings in Hong Kong later this week, and then working together with you, all of you in the Manila team all next week. It's fantastic.
We're
So we
excited to
couldn't.
have you here. Yes.
Yeah. So how's your week been, Mel?
Well, we've had some exciting pieces come out at Lundin's Investor Insights. I think we
Exactly.
turned some very important heads towards our article, recently published article about Indonesia's sovereign fund. So it's a bit
Mm.
controversial. Of course, there are hopes pinned on that fund that it will perk up investments and growth for Indonesia. But at the same time, of course, we don't think that taking a gamble using public services or social services money is wise. So, of course, that did start some conversation among our circles and beyond it. Of course, people
Yeah.
who are a bit influential for that market have been piqued as far as their interests. So, it was quite an experience to see it unfold over the weekend. And we just recently, I think yesterday, published another article about the outcome of the Japan elections, which we'll actually elaborate on today, Peter.
Yeah, it's fascinating. We are not so easy, yeah. So then we are not satisfied with the so-called sovereign fund in Indonesia. And it's not a sovereign fund; it's a hedge fund, basically. And the government should stay away from that. And now we're also criticizing the possible outcome in Japan because they just want to spend money. We are critical, yeah.
Yes,
We are,
but
we
of
are not,
course,
we are not, we're not really making friends out there. Anyway, the most important about 40 years of experience in the financial market is to stay faced against good quality.
Mhm.
Also, when we talk about governance and when yeah, fiscal policy, whatever. Yeah, well, let's get started.
Yes, so just to give us a bit of a rundown of what's in store this episode. Yes, we'll talk about the very fresh outcome of the Japan lower house elections. We did talk about that last week, and then we'll look at how's it looking like moving forward. Then we'll head over to China and their very new opportunity in the microchips, memory chips race globally. Heading over to the US, we'll look at a segment among the fast foods, quick service restaurant space and how these companies are also feeling the pinch. Um, More on the elaboration of the cost of living issues as far as American households are concerned. And then, of course, we'll take takeaways from Stockholm from the event that you took part in, Peter, this week. And of course, we wrap it all up with our global outlook. A lot of exciting bits and pieces here and there. I'll get it started with Japan. We did talk about this last episode. And as markets saw it, the Liberal Democratic Party of Japan, supporting Prime Minister Takaichi, won big. They won a supermajority. So the gamble that the Prime Minister took paid off big time. It was fantastic. And apparently, she was popular among the youth. So the harsh winter wasn't a problem for them as much as others. So the landslide win is apparently like a landmark thing for Japan. They got easily got 2/3 of the lower house. So that means It's gonna be much, much easier for the prime minister to push her programs and proposed legislation into law, especially the most crucial thing that we've been warning about. It's her expansionary spending plans for the Japanese government. So, of course, we get that she wants to do it because she wants to spur GDP growth, support the aging economy and the aging population. But of course, markets were happy. So the Nikkei 225 was up 6% for the day right after the election. um the yen got stronger against the dollar.
Mm.
It was rallying on the Takaichi trade, as they now call it. So very expansionary in the short term. That's of course gonna perk up activity in Japan. Although China is not happy with it. So we know that the Chinese government was offended with the prime minister's comments about Taiwan a few months back. So that was in November. Now they're demanding another retraction and they're stepping up their retaliation against Japan. So started with a travel boycott, some military provocations at sea, and then recently some Japan-specific export controls on rare earths. So they've done that
Mm.
before with the US. Now they're doing it against Japan. They even took back some pandas that they had stored in a Japanese zoo. So that's the extent and the range of what's been happening geopolitically or diplomacy wise. But I think Japan has more room to push back and hold its ground against
Mm.
China more than the US. Although, of course, both remain to be key allies economically. It is a big market. So, as far
Mm.
as ties go, they can keep it this way. But of course, we circle back to that bigger concern about fiscal spending. We know that Japan has the biggest debt out of all nations. More than 240% of their GDP is debt. So they're really just borrowing to sustain whatever public services that they have. Especially they have more uh, elderly to support and less of the working age to support the elderly. So that's where the big fiscal hole is.
Mm.
It's not bad. Of course, you have to support your people, but supporting financially is another issue that, of course, investors are not comfortable seeing. And yeah, it is a concern, especially about sustainability. If you're just going to keep um, enlarging that debt burden for Japan when Prime Minister Takaichi's plans go live,
Mm.
more than how much she will have to shell out, the government will have to shell out to do that. The focus
Yeah.
should be where will it be sourced? How will it be supported? And yeah,
Mm.
that's really what's bothering the markets about this concern.
Of course, public spending has always been a concern, in particular for bond investors, and in some way it supports the stock market. As of course, stock market is in general happy for higher
Mhm.
GDP growth. Not that GDP growth and macro is the most important for the stock market. It is, of course, the performance of the companies themselves. But anyway, it is probably what's in the cards. And whereas we are unhappy, yeah, we would prefer if the money were used really for true reforms.
Yes.
Reforms in the economy, as what we see with Japan is it exactly the same challenges like the old Western economies, US, Europe, Western Europe, particularly the Eurozone, struggling with the same structures, old-fashioned structures, and no flexibility. Do we start to see some of the signs in China? Yeah, China is actually that advanced economy. There's some areas of China we actually start to see this early stage same development. But what we have been sort of discussing, Mel, is even in Southeast Asia, there's maybe a bit of headwind. Yeah, we do see lower growth rates. Of
Yes.
course, that reflects that the rest of the world is seeing lower growth rates, and
Mhm.
and we have seen countries taking different initiatives to try to keep the momentum up. Thailand, in particular, has struggled in different ways and actually even handed money out to consumption. We've seen India doing a bit better job by lowering the income
Taxes.
tax. Other initiatives here and there, of course, as mentioned, also Indonesia doing something, but that's sort of in the wrong direction. But the key is, could we see during this year, Mel, that
Mhm.
Southeast Asian countries will do even more to keep up the growth momentum as an initiative, spending money, whatever.
Of course, they do want to perk up growth as fast as they could. So that
Mm.
kind of explains why Thailand literally handed out cash to its people just so they
Yeah,
spend more.
yeah,
But at the same time, they know that they cannot be so heavily indebted because of as emerging markets, that's more of a concern as far as global investors are concerned. So they might crowd out capital instead of and attracting them in if they are not able to justify these
mm,
mega spending initiatives. And if investors do find that these stimulus plans are not fiscally responsible, it would do the
mm,
reverse. It could perk up growth like 1 2 quarters maybe, but then again the pullback could be much stronger in the capital formation side. So I
mm,
would be careful, which of course should be the mantra of any fiscal planner as far as governments are concerned. Yeah, I think some countries like Thailand, maybe the Philippines as well, would be more concerned about the slowing growth, but
mm. Yeah,
it pays also to be prudent about it. You can't just go around handing out cash every quarter. That's a
no,
one-time thing that you should be able to do. So I guess
yeah,
it also reverts to spending on true reform. So that
yeah,
will look like building more um, actual supportive infrastructure to industries, plugging
mm,
gaps in connectivity, lowering utility costs, more than
mm,
just giving out money for just for the
yeah.
sake of it.
It'll be interesting. It's only sort of still early February,
Yes.
so that we are convinced there'll be quite a lot coming, but of different initiatives from also Southeast Asia countries.
Speaking of
Good.
perking up growth, Peter, China
Mhm.
is also
Mhm.
trying to do that. While it
Yeah.
did hit the 5% target last year, it
Mm,
seems that the clouds are shifting, but it's still there coming into 2026. So
yeah.
for example, the price wars have persisted. Producer prices have remained down, although inflation has started to perk up. Although we're seeing though that there is a new space which China can take a big opportunity out of, and that is the memory chips or
Mm,
microchips production. We
mm,
know that globally the leaders are the likes of Samsung and Hynix from South Korea, Micron and similar companies in the US. But apparently, the last year's AI rally has prompted these large companies to shift their production towards AI servicing. So AI related
yeah.
works, AI related supercomputers, super chips, that
Yeah.
it has taken away resources and I guess production lines away from your lower grade quote unquote
Mm,
chips that you use for your smartphones, your cars, your gaming consoles, your TVs and appliances at home. So it is cost pushing prices up for these consumer gadgets while at the same time it's still much needed so you don't really drop it altogether. um and that is causing some manufacturing delays as well because if you can't source these chips specific to these uses, you can't
mm,
produce as usual despite ongoing demand. Of course, there are always new phones coming out, and then you
mm,
need to build them, and you can't build them without these multiple chips in one phone, for example. So
mm,
China has actually been trying to push for self-reliance in this space. So it's trying to encourage more domestic chip manufacturers to produce more, churn out higher grade, higher quality chips. And these companies that have been essentially ignored by those suppliers that were shifted towards AI uses are
Mm.
starting to consider, or if not, signing contracts already for supply of chips from these China chip makers. And that's a new space altogether that they could dominate easily, especially if they're able to provide or meet the standards that
Mm.
these producers of gadgets and appliances would require. It also bodes well for them since President Xi Jinping also wants that self-reliance push for microchips after in the aftermath of the Nvidia ban from
Yeah.
Biden in the US. So
Yeah.
it's a unique opportunity that I guess created itself for China, and it's very interesting. We'll actually talk about that in one of our articles in our upcoming magazine. So watch out
Okay.
for that.
Exciting. Because the chips are almost like a sort of a raw material, yeah. It's very
Actually.
fundamental.
Mhm.
It's not just a sort of a IT thing. It is fundamental.
Yeah, these days
Yeah.
it's integral to any electricity consuming material or item at this point. Yeah.
Yeah, yeah, but it's all over. Just in things you have at home, they have, of course, they have a chip. There's even in the toaster there's a chip, but most of them need sort of a GPS positioning, so they might have three different chips, some going to a satellite, whatever, to keep the position. It's all over, and that's well known, but it is so it is a very fundamental thing. And of course, if China they can come up with just a cheaper solution, that means a lot. Yeah. So it's really worth for investors to have an eye on this.
Let's head over, Peter, across the globe and look at the US. We have been talking about this mega trend of squeezed middle class, and
Mhm. Yeah.
we're seeing some part of that worsening, I guess, or
Yeah.
expanding as far as the American consumers are concerned.
Yeah, this is a bit more, I would say, the classical macroeconomic conversation. Of course, we like to look into what we would call primary factors. So when we speak with investors, funds, whoever, companies also get some real data from companies about how they see their consumers are behaving, moving. These are the things that we actually pay quite a lot of attention to. And when there are shifts in the US economy, it is very often, or it's almost 100% sure, we see shifts in the consumption of sort of the low cost restaurants, to put it in a nice way. It's sort of, as we are talking about burger chains, well known burger chains, and pizza chains, whatever, as a fast food chains that is categorized as a restaurant in that category. A typical where lower class incomes would go and have a meal. And we do see a shift, and we talked about it also last year. There is a clear shift. First, what people they do first is they trade down, so they purchase a cheaper menu. They still continue to go there, but spend less money. And next step is they simply don't go there. And this has been going on last year, and it's still going on. The data and what we're seeing actually getting right now. But what doesn't happen so far is what you call the middle class, as the middle class, and of course not the upper middle class, but the typical middle class would normally make out the compensation for these fast food or cheap meal chain restaurants because some from the middle class will then drop down and have these cheaper meals. But this is not happening right now. It's not still going on. And maybe in the beginning of last year, we had a conversation also if we're looking into the housing market in the US.
Oh, yes.
The house owners are actually, from a debt perspective, doing quite well. When we look back to the global financial crisis, house owners were really in debt, as they
Mm-hmm.
had huge problems. This is not the case right now. So we do see the core middle class getting squeezed. The cost of living is a bit more is more painful, but very fundamentally, um, if the house owners they're actually okay from a solvency perspective, and so far they are not trading down on the meals and going as a dropping into the very low category or price category of restaurants. That is interesting because we also see a sort of a bit different signals from the labor market. The labor market, jobs are disappearing, but it is the low paid jobs that are disappearing. So we are seeing a even bigger spread in the U.S. economy of how households are doing. A bigger share are doing worse, but the main share are still doing okay. And this is also extremely interesting when we are moving forward to the midterm elections. So this is how we see it right now. The unusual thing is that we're seeing this split. Normally, we will see a move of the whole society, but we are not. We have never favored Trump as a Trump's economic policies. But if we look into this, the European coverage, particularly of Trump and the Republican Party, it is extremely negative. But we are not seeing the truth. As so it's this is sort of this is a bit to have a look at saying, okay, how is the U.S. economy actually faring, and where are the voters? And these kind of data is interesting in that study. So yeah, that was just sort of a small sharing of many of all these different components we're looking at, and we see it as interesting.
Actually, Peter, I think the big disparity also draws from it's mostly experiential at this point. Either you really want for a bang for buck option for your food, or
Yeah.
you want it to be something experiential altogether. So maybe that's why they're not dropping down because this is their preference. Maybe they prefer a bit healthier, or should I say less sinful option. That's why you're not taking the cheapest of the menu. But then
Maybe,
again, at the end of
maybe,
the day, it's incomes that we're talking about.
maybe you're right. That'll be good.
Peter, talk to me about your recent, very fresh discussion in Sweden.
Yeah. It is. It's really fresh. It was yesterday. I came back last night, and it is the TechArena event. It is a giant event for particular startups, growth companies, and of course investors of all kind, going from what you would call pre-seeds, also
Mhm.
the first capital injection, and all the way up to but typical venture capital and maybe even private equity. But typical the earlier and mid stage of investors, 10 to 12,000 people are gathering for these days for this event. It is huge, more than 50 C-level speakers from all kind of multinational companies are coming to speak. The well-known earlier Prime Minister Boris Johnson is also coming. So it was actually a bit honorful to host a roundtable, and I did yesterday participate two times because I was also invited to another roundtable to share some insights. And so it was a great day. And the key takeaways is that now we are talking about the non-listed market, so to say, as we're not talking about the traded market, not companies that are listed on the stock exchanges, but young companies and all the stages before they hopefully one day will end up in an IPO that we like so much here, you and I. The takeaways, well, I would say, is people recognize that Southeast Asia and Asia in general is moving fast forward, faster than the rest of the world. As mentioned, it's not about the listed market, but just when we advise well on wealth, we can see people are underestimated in Southeast Asia, but particularly Southeast Asia. And when it comes to startups, non-listed companies, it's even worse. As European investors are having big difficulties, sort of getting themselves started to just figure out or learn more or come just a step closer to startup companies in Southeast Asia. When economies are moving forward, it is just a more pleasant environment to be for investors. Things tend to move faster for the same reason. And we know that the eagerness to move fast in Asia is simply outspoken. So there's a lot of good things, ingredients for startups and also for investors to start up. And European investors are simply under invested and are also maybe missing a bit the train. So on the other side of the world, it is very obvious that US as such look fatigue as a destination. It is, we see it in the listed market, but we also see it in the non-listed market. Prices on companies are very high, but it's like I know there've been a lot of noise and a lot of unhappiness with Trump, but actually also if you look into a bit sort of the just how it's perceived is it is not as attractive as it has been. As
Yes.
simply as that. And that is an outspoken perception. And then you can say, of course, that for Europeans, that leaves Europe a bit more open, and people are looking to invest more into European non-listed companies than they have been doing, also European investors. Um, One should say the quality of investments is seen as pretty high, but also the investment infrastructure, as everything, the legal structures, everything you can trust what goes on sort of in general in Europe, and that has an importance. But what is interesting as well, and that is really, really clear to see that Latin America among investors, also as investors investing in non-listed companies, venture capital funds. Latin America is absolute rising on the horizon as something people are paying attention to. And more capital is flowing in that direction. And the table I hosted, we had actually a sort of a public source of investment, but supporting private companies in
Mm-hmm.
sort of mid-sized companies in moving into other countries and invest there and also co-invest. And they could confirm that a lot of money is actually starting to flow towards Latin America. That is very interesting. And Africa is on the radar screen among a lot, much more than I've seen before, heard before, had the conversation before. It is a lot. I've seen other predictions about 2026 that would be the year for Africa. And it is actually very interesting to see how many people who are mentioning Africa have Africa on the mindset. There's a shift going on.
Yes.
The shift is fascinating,
It's a
and
big one.
it is actually, and it is actually the big call is that there are so many people out there believing in truckloads of opportunities, and they are there. So that is the good news.
Mm-hmm.
Despite we have a lot of noise in the world, but honestly, at Long Beach, we see the world as being hammered a bit by noise, but not by bad news. And the in behind that, all a lot of good opportunities are actually arising. So yeah, it was a great day, fantastic event. It's just to go ahead with the investments.
Yes. And actually, Peter, as you said, there's a lot of noise around global developments, but
Mhm.
opportunities are aplenty.
Yeah.
In more, in some areas more than others. And
Thank you.
to wrap it up in our global outlook, Peter actually touched upon it already. For Asia, we are very optimistic still. It's good to see efforts like in Japan and maybe in select Southeast Asian economies to perk up
Mhm.
growth quickly in response to decelerations in 2025. But there is room to be more selective in terms of the strategy, the approach towards stimulating economic activity. So it's not dole outs, it's not one time tax breaks, but it should be more reform focused. And I
Mhm.
think that's enough, more than enough reason to be encouraged about prospects in for investments and for capital growth in this part of the world, Peter?
As mentioned again, despite the truckloads of noise all the time, we still overweight risk. So we prefer risk. Of course, as you mentioned, particularly in the emerging markets, still. But also, when we're talking about, we have for more than a year changed our recommendation to take more non-listed um, European risk and particularly maybe German
Mhm.
investments on board. So we continue to stay with our view as usual, and there's sunshine enough to stay optimistic, positive, despite whatever volatility we will explore here. So that's quite good.
Thank you, Peter, and thank you to our listeners. Thanks for tuning in. Thanks for tuning in. We'll be on the lookout for market developments worth watching. Catch the next episode of Sound Economies, Mel and Peter on the global financial markets, available on our website and on Spotify. Here at Longines Capital, we've spent over a decade building a strong track record with our full suite of services and high performing funds. Now we're setting our sights on something even bigger, an IPO in November 2027. It's been a long time coming, and we are ready for the journey. Join us in our next big step. Visit our website to learn more.